what do we have today on the agenda? Of course, OPEC rumors all day long. Maybe even during the show we'll get some wild action over there. Just after the show, we have the German unemployment change. The labor market in Germany looks really good, and we're expecting another drop in unemployment. More importantly, for the Eurozone, for the euro, is Eurozone inflation. Preliminary numbers for November, expecting another tick up in headline inflation to 0.6, but core inflation is stuck at 0.8. Mario Draghi talks again. Actually, it's the second time this week, and also last week he spoke quite a few times. This time he's in Madrid, in Spain. I'm also here in Spain, in Barcelona, and but I don't think he can tell us anything new, and I don't think he wants to. I think he wants to keep his cards close to the chest. Then we will have market-moving events for sure. The ADP non-farm payroll is a big hint towards the NFP. Not always well correlated, but always moves markets. And 15 minutes later, Canada's GDP. Maybe it'll be a bit overshadowed by OPEC. I mean, if you trade the Canadian dollar. And at the same time, we have the Fed's favorite inflation measure. That's called the core PCE price index. Will probably remain at 1.7 year over year. And even if it does move today, at this point, it's sort of markets are fixated with the rate hike, and that's probably will not change. I mean, I don't see how it can change the picture. What else to it? It's quite a busy day. Again, OPEC will run all day. We have the Chicago PMI from the United States at a quarter to 3 GMT. US pending home sales should not move markets. Oil inventories could add to the mix for OPEC. If they rise again, maybe it'll urge them to cut. If we have too much oil running around, maybe they will cut production. And we have a speech from Jens Weidmann, the head of the German central bank, the Bundesbank, that maybe could have an impact on the euro. So quite a busy day to end November. Okay. And now we'll cover the upcoming events for the rest of this week. So Thursday, December 1st, begins early with Australian capital expenditure. For those trading the Aussie, this is an important event. It's released only once per quarter, and it has a big impact on the decisions of the RBA. That means it has an impact on the Australian dollar. Later, we have the Chinese official manufacturing PMI from the government, but later comes the more important release, the Chinese Caixin manufacturing PMI, the independent measure of the state of the manufacturing sector in China. It's important not only for the Australian dollar, but for the global economy. It's PMI day, and we have it also in the United Kingdom tomorrow morning. And then, as always on Thursday, the US jobless claims. Yet another hint towards the NFP, but not as important as the ADP. The ISM manufacturing PMI, that's already a more important hint. Look for the employment component and look to see if this sector is bullish, is optimistic on some kind of a Trump plan. Remember, there's a difference between what politicians say and what they do, but currently markets are optimistic. On Friday, of course, it's NFP day. But before that, we have retail sales in Australia, construction PMI in the UK. At the same time of the NFP, the Canadian jobs report. So it's also a very busy week for Canada. That's why I picked it as the focus of the currency of the week later on. And regarding the non-farm payrolls, basically we're expecting no big surprises. Expecting a gain of 165,000 jobs. That will be in line with what we've seen last month, around the same levels. Healthy gain in jobs, not as strong as maybe last year, but the US economy is getting closer to full employment, and it's natural to see these job gains slow. The positive thing when we're getting closer to full employment and it's harder to find employers, wages begin rising. Finally, we've seen a break above previous levels last month, 2.8 year over year, a level not seen, I think, quite a few years, can't remember exactly how many, and we had a big jump of 0.4 month over month. This time expectations are a bit more modest for 0.2. I believe that even if we have it, even 50,000 jobs gained, and wages even fall by 0.1%. I mean, a terrible report by all means. We will still get the rate hike. It'll be a blow for the dollar in the short term, but nothing extraordinary regarding. It will not move Yellen and the Fed. We can expect, but I don't think it'll be terrible. I don't think it'll be really great. I think it'll be good enough, continuing the trend. In recent months, we didn't have too many big surprises. We only had them every once in a while. Always trade with care the non-farm payrolls. Even though a rate hike is priced in, even though traders are looking at OPEC, looking at what Trump will do, looking at the ECB decision next week, the non-farm payrolls is always a big event. Okay.